Oh, hello.
Hi. Sorry, I was dialed in earlier, but I think my assistant somehow put it under her own name. So I think that's what you guys did when
Ah,
I was logged in.
yep. Yeah,
Okay.
so I was actually
Uh,
saying hi and I could hear you and I could see
Oh,
you, but I didn't know it was you.
apologies for that. Yeah.
No worries,
Thanks.
no worries.
Hi everyone. I just a bit delayed because of technical issues, but I think all good. We can start.
All good, great. Thank you so much. So, hi, welcome to our first series of the Business Buzz on Startup Grind. And today we'll be discussing VC funding trends in the Malaysian ecosystem. So, I'm so glad to have you on board, Raja Hamzah. And I told them that you are the co-founder and the co-managing partner of RHL Ventures. So maybe you could share a little bit about yourself as well as about RHL Ventures.
Sure. Thanks everyone for listening in today. I'm the co-founder and managing partner of RHL Ventures. We are an early stage venture capital fund investing in Malaysia and across Southeast Asia. I
Mm-hmm.
used to actually work in both Hong Kong and Singapore in 2016. Decided that it was a good time to get a bit crazy and come back and start my own thing. And honestly, the
Right.
only thing I was good at that time was investments.
Okay.
And at that time, the only money I had for was probably like early stage investment. So that's how that
Right.
we kind of came together. A few of us, three partners coming together to invest our capital
Mm-hmm.
in small angel checks here and there. Um,
Okay.
the, the presence grew, the demand grew, and we did launch our first institutional fund about 2.5 years ago. Now
Okay.
we've also launched a new fund this year as part of the
Mm-hmm.
Penjana Capital Program, helping Malaysian
Right.
startups scale up locally and also across the region. So happy to kind of entertain any questions we have today. I generally look at all investments across all sectors, whether it's
Right.
agriculture, prop tech, fintech. I
Okay.
think now
Okay.
with what's going on in the tech ecosystem, it's very exciting, and I think I would love for
Yeah,
Malaysia to take a bigger chunk of that share.
definitely. I would certainly. Um, so just let's just jump into fundraising, right? So in general, how does the process begin for a startup, like from a VC perspective? If you could tell them, because I think we would have a mixture of people that generally want to know about funding, and also those
Yep.
that are looking to raise funds during this
Yep.
time, right? So what does that process encompass?
So I think in fundraising, it differs a bit slightly. Expectations differ from, let's say, a seed startup to a, let's say, Series A or B startup. I think at a
Okay.
seed startup, it's a lot about the background of the founder. So
Okay.
having a solid background or solid experience prior helps, to be totally frank. So let's
Mm-hmm.
say, for example, a company in Singapore recently came to me and he was the ex country head of Uber. And I think that gives us a
Okay.
bit of confidence in terms of his
Right.
growth and scaling
Profile.
capabilities.
Mm-hmm.
So and at the same time, there are younger founders who come up, and I think
Mm-hmm.
that's all kudos to them. But I think when a younger founder comes up, they usually um, surround themselves with subject matter experts or anything
Right.
along those lines. So I
Right.
honestly, when you're a seed, we are just backing a piece of paper. We're backing the hope that
Mm.
we're with you. So that's
Okay.
usually the case. In Series
Okay.
A and B, it's maybe I would say 50-60% about the founder, 30 40
Mm-hmm.
percent about how they structure the business and how they contextualize that in terms of numbers.
Okay.
But having said that, I mean, as we grow larger and larger, I think the
Mm-hmm.
expectations of stronger numbers and sustainability come into play.
Right.
Because when you go from, let's say, a 10 million check to a 50 million check, the type of
Mm-hmm.
investors that you bring about are different as well. But I
Okay.
think any of the purposes of probably this panel session, which is probably earlier stage, I
Mm-hmm.
think it's a lot to be the founder and kind of the product they are pushing.
Right. So I would say, so you would say that the prerequisites are basically just the founder's profile as well as whether you would believe in their business plan or not.
Mm, correct.
Right. Okay. Okay. Cool. And during this pandemic, right? How have you, since you said your early stages when you first came in, it was about 2016. Was that 2 years ago or 2016?
We started in 2016, then we raised
You
our
started in
first
2016.
institution. Like we first invested our balance sheet for the first few years.
All
2019
right.
is our first institutional fund, and
Okay.
2021 is the second fund.
Okay, cool. So during that time, 2 years ago and now, how have you seen the scene, change over with this pandemic, right? And how long now does it actually take to raise funds? What are the methods that have actually changed because you go through pitching sessions, and you meet the investors, and then you see whether they buy your plan or not. But all of that now probably has transitioned digitally. And
Yep.
what is actually different between you doing it then and now?
Yep. Okay. The way I see it now in 2019 was 2021. I believe in 2021, the abundance of capital changes things slightly. So I think that the amount of capital and investors that are coming to Southeast Asia is different compared to before. You do see
Okay.
the likes of Lightspeed, Excel,
Mhm.
all come into the space.
Mhm.
KKR, TPG, all also going earlier. So the amount
Yeah.
of capital from a regional and global point of view have increased. And I
Mhm.
think Southeast Asia is one of the few places where there's growth. So
Right.
how does that, okay, capital is good, but how does it impact you as a founder? I think
Mhm.
you can be a bit more aggressive in terms of your growth plans.
Okay.
And then you have to be good at kind of selling the story, because now you have to sell the story to a global audience. And when a
Right.
global audience, meaning that from a Malaysian-centric company, you got to
Mhm.
have multi-country focus, because that's what
Okay.
overseas and foreigners will look for. And
Right.
point number two is now your second round doesn't need to take 12 months. It can take 6 months, because there's a lot more capital on board. So the
Right.
power of networking, especially in
Okay.
times of COVID, is important,
Mhm.
because the expectations have changed over these past few years.
Right. Okay, cool. While we're on that, we actually have some questions. So if you don't mind, I'll be grabbing some questions from
No
the Q&A.
problem at all.
We'll
Let's
put
keep it
them in.
casual.
Yeah, so there's a question from Alexander, and he wants to know, what is the trend line for valuation for seed or Series A companies look in Malaysia? Are valuations increasing?
Increasing or decreasing? Is that your question?
Increasing, yeah. Are
Yeah.
valuations increasing?
I would say that the general expectation, I mean, it's all relative, but I think in terms of seed valuation, what I see in the region now, especially for like kind of piece of paper, I think generally people can sell their businesses between 2 to 4 million US. So let's say about 10 to 20 million ringgit. And
Right.
then I kind of have dilution of about 15 to 25%, depending how you structure it accordingly.
Okay.
Why is that the case? I think raising 1 to 2 million of an idea now is getting a bit more common, because there are capital players and more seed players coming into the market. I think Penjana already has 2 under their platform, and I think the number will just grow.
Right. Okay. And he also asked if are there any significant differences in what VCs in Malaysia may look for versus those in Singapore or other countries in Southeast Asia?
I think the interesting part is now I get a lot more VCs from the region pinging me for deals. Why? So the good part about that is that I think the expectation now of a local versus regional company, or even I would say a Malaysian versus Singaporean, doesn't change that much. It's just how easy is it to get capital, right? So as a Singaporean seed company, it's easy because all the VCs are just like in the country, and you can probably
in the country.
And in here, you got to find different ways to connect with those investors and take that accordingly.
Exactly.
So I think that's maybe the key difference. But honestly, as a startup, I think the difference here also, we have some grant programs that can get you going before you have to raise your funding. You utilize that and use that to take the next step.
Okay, and this is specifically for RHL. And does RHL go as early as seed? Website says a year later.
Yeah, so primarily we don't do seed, but we do like to talk to seed companies so that we know them from an early stage. So we generally do kind of like post revenue, so pre-A, A, B, depending on how you view it. But at the same time, I mean, we also have looked at pre-revenue companies, but are at a later stage of funding. For example, we've looked at a few plant protein companies, and they are usually like pre-revenue till Series A or B. And we've come close to investing in a few because there is big potential there. So I think it really depends. But in general, I mean, just to keep everyone on the same page, we do generally post-revenue companies.
Generally post-revenue companies. All right. Okay. And with that, okay, so guys here have a lot of questions for you actually, so that makes it easier. So question on the gestation timeframe of VC funders to startups. So he says that his understanding is that most startups rely very much on the fate of the startup and its contextual opportunities. So these series funding cycles are determined mainly by the VC startup or a mix of both?
Generally, I think there's two ways to view funding. One is obviously you want to raise the money for the growth opportunities you have. Two is I think from a VC point of view now, we have to realistically go a bit earlier than what we are comfortable with. So what I've been doing with some companies is that we offer, like, if we really like the company, we say, oh, why don't we offer you a bridge to your next round, and it'll be a convertible anyway. So then the deal's not priced yet. So it's to try to find win-win opportunities, because honestly, there's some sexy deals out there that it's very hard to get hands on. So you just got to find creative ways of finding allocation.
Right. Okay. So you just see what then matches the business plan to what you believe in and where you see yourself going in at that point of time, lah.
Correct.
And you don't really actually turn down deals, so you just say you would look at it in a later stage. Yep. So you keep the relationship as well, right? So do seed investors typically require proof of concept? That's some still thing.
I think your seed investors, not necessarily. But I think there needs to be some movement towards that, whether it's if you're a fintech company, you've passed the sandbox. If you're kind of e-commerce company, you have some products for them to try, a prototype. Right. So yeah, it depends, but in general, you gotta have something lah. Unless your background is super solid, then that works.
Right. Okay. And we have a question to pick your brain. So he's saying, Wan Hong is asking, so Grab didn't IPO in Malaysia. Carson is considering US listing. In Indonesia, Bukalapak Gojek listing domestically. What went wrong in Malaysia? What is the bottleneck to keep internet listing in Malaysia?
I don't think there's been a big push by our regulators or even the Bursa itself in terms of getting these companies on board. I think there's an ace market, yes. But I think in terms of kind of our traditional tech companies.
I think you got muted. Hamzah? I think he's frozen. Help me out, guys. Is he frozen? Yep, frozen. Just give us a sec. We will. Oh shoot, he left. Well, that's the thing with technology. We'll just get him back in. Just give me a second, you guys. You're doing well. Keep going with the questions. Let's see.
Yep. Sorry about that. Can you hear me?
Cool. Yep. Can.
Okay.
Great. Go ahead.
So I think the question is on the Bursa. I mean, on the listings, right? So
listings.
If you ever had a concerted effort into getting our startups to list here, or any regional startups to list here, frankly, for a regional startup point of view, they probably won't this year anyway, unless ETF or Khazanah or Quab is anchoring a big part of the round. It's not like a Carson. I think there needs to be a concerted effort to bring them here. So the only reason Bukalapak listed in Indonesia is that I think the stakeholders over there push that hard. I don't think there's movement of the same here, and that's why there's a gap. At the same time, also Malaysia's stock markets are not very deep. It's very dependent on kind of instis. I think foreign ownership of Malaysian stocks are at all-time low of 20%. So I think it's up to our stakeholders to kind of step up on that. I think with the right persuasion, maybe the local guys can list over here.
Can list. Right. Okay. Okay. Right. Cool. And Alexander is asking, so what revenue and growth rate should a SaaS company in Malaysia reach in order to raise Series A? Of course, there are a number of factors to consider, but what should one expect? I think it's very specific.
I think at A, you just got to have like numbers that are realistic in terms of multiples. Just kind of do a multiple on other peers and then take it from there, right? So if you want to raise money at 10 million, you need to get a revenue multiple. Let's say your peers raise at 20 or 25 times. Then you just be conservative and say, I can raise at 15 to 20 times, for example. So it needs to be somewhere along there where they are comparables, and when they are comparables, it helps. But at the same time, negotiations about this is an art lah. So if there's growth and there's big growth story, I've seen people raise significant chunks of capital with very little traction. For example, I think Bukukas, which raised like a $50-60 million round, they were pre-revenue when they did that, right? So what it is.
Okay, cool. I have a question. So, what do you think in Malaysia, in our local scene, actually, what do you look for in a startup, or those that come to you for funding that makes or breaks the deal usually?
I think the easiest deal breaker is when like the startup sells like names and I cross check those names. I say, oh, there's an investor coming in or a client that's already in and they lied about it. That's an easy red flag. I think that's probably easy.
Okay.
Other than that, I think, I don't know, it's more like more network cross-checking the VCs that are invested. If it's a blue chip VC, I think there's higher chances that we go in. So I think it's very more people thing. In terms of numbers, we do some diligence on the numbers, but I think as an early stage company, there's very little numbers that they have that can be like, wow, this is like.
Right. Understand. So it's not so heavily on the numbers, but it's more of on the person again, right?
Yeah, correct.
And the business plan. Right. Joshua wants to get your thoughts on advantages of raising money in Malaysia versus regional VCs from Singapore or Australia specifically.
Okay, the way I see it is the good part about being a Malaysian VC or name a local investor is that they probably understand your business and context your business a bit better. So they can go in earlier and give you the earlier capital. Latest your overseas VCs can probably give you like, I'll be honest, like better valuations because they don't know the local context of what you are trying to do, but they also will take longer to execute. So you want someone who you can deal with quicker and understands your local context, or you want someone overseas who will take longer but may give a bit more capital. So there's no right or wrong, but I think having this COVID, it really underlines the importance of having more local investors. I think we are severely lacking the number of investors we have here. So that means that our deals happen much slower. In essence, a lot of early stage deals happen in a club, whether it's 3 VCs or plus individuals invest together. And when there's critical mass, then that works, right?
Right. Okay. I know what's asking, is Equidam's valuation realistic? What do you think?
Sorry, can you repeat that?
Is Equidam's valuation realistic?
I think, honestly, I want to say is I think just to spread out the question a bit wider, is any valuation realistic? I think the only way to kind of judge that is by going to public markets and trading on multiples. But at the same time, you see the likes of Grab, I mean, they are burning money, truckloads of money, and still value at 40 billion. So I think the market has been upended, right? So I still firm believer that once you list, you have fundamentals that you have to kind of rely on. But at the same time, now people will just back whatever they believe. And hope is a relative and subjective thing. So it's how you hope that can earn you the valuation.
Right. I agree with you on that. Kevin wants to know, do you anticipate the SEA, which is Southeast Asian startups, gaining more interest from overseas?
Yeah. I think on the question of like startup interest from overseas, the way I see it is there is a lot more capital that's chasing growth, and there's a lot more family offices that are set up in Singapore, right? So I think Vulcan is one. I think there's quite a few other like large families that set up family offices there. So I do find that the global investors are coming here in some shape or form, some smaller, some bigger, right? So I think the trend will just increase. Is whether us as Malaysian founders and startups will be part of it or not. And so it's something we've been pushing heavily with Penjana. So I think with Penjana, we've always wanted to bring the best Malaysian and regional startups to Malaysia and establish that base here. And I think we need critical mass for overseas investors to care. So if we don't have critical mass of startups or successful startups, then investors can just overlook Malaysia and just say, hey, I'll do Singapore, Indonesia, Vietnam. Who cares about Malaysia, right? I saw Sequoia Search did a recent investment in Thailand. I think we are in the crosshairs, but it's just that it's up to us as VCs and founders to kind of sell the story better, and also make our investors money.
Right. Okay, understand. How Saifi wants to know, how would you like corporate Malaysia to participate in helping early stage companies gain traction locally? What has been your experience with this so far? So how can a corporate participate?
Okay, I think from a corporate point of view, I think most corporates here have interest in tech and trying to do something there. That's the base. But at the same time, most corporates don't want to invest. They want to just either use the service or learn, and then sometimes even steal the idea, right? So I think it hasn't been done in a very meaningful way. And I'm not talking about only corporates. I'm also talking about, like, let's say, the government sector and the public sector. So I believe I believe that we need to kind of help them help themselves, right? So the reason I know this is that I've kind of, for the fundraising for a fund, we've gone through like most of corporate Malaysia. And honestly, in fundraising, like 90-95% people reject you, lah. But most of them will say, hey, if there's any good companies that we can look at or use their service, we'll be happy to have a conversation. So I think we are pushing those conversations. It's been slow, but I think it's at the right juncture during COVID that, hey, they may use the service or do pilots and are a bit more open to this. So to me, in the end, it's just about hustling and getting to the corporates' mind share. In the end, it's usually in Malaysia, corporates they are the supporting teams, but they're also driven a lot by like kind of founders and kind of the senior management. So I think there needs to be a good balance of top down and bottom up to get things done.
Right. Okay. There is a question from Wan Hong. So he wants to know, can you give us a sense of what valuation metrics are anchored on for early stage funding? Price of total addressable market, price to sales are nonsense matrix to large, complex, highly volatile and non-tangible. So in that case, or is it a case of figuring out how much cash burn is necessary to tide through the next stage of funding?
Okay, most people want that cash for that next stage or the next growth hope, right? So the quantum is usually, now the case is that you say, I want, say, 10 million, and I want dilution at 20%. So you kind of back off the numbers from that. But then when there is a number, you just have to try to anchor it on something. And usually that something is a price to sales target, or even, let's say, a GMV number, a GMV multiple. And it's a lot easier for, let's say, for my team, who's, I think Adrian, who's dialed into this call, if there's a number anchoring it, let's say my peer in Indonesia has raised money at 30 times GMV, but I'm raising money at 20 times. Then at least I also have a bullet to go to my IC, right? So in the end, at that kind of series A and B, there needs to be an understanding of multiples and valuation. At A, I mean, at seed, honestly, people, there's no multiple. There's no denominator to rely on. So it's just how you see the story lah. But I think to that question is, I think on the cash burn, it's just usually an estimate. I've seen companies say that this cash burn will last me 12 months, but in 6 months they raise money again. And do investors penalize them there? If there's a good company and they're showing numbers and they're burning the right way, no, people just fund it, right? People are getting easy lah, investors.
Right. Okay. And do you expect the appetite of Southeast Asian startups in general and Malaysian startups specifically to increase post-COVID? So we're talking about, say, post-COVID could be a year from now.
I don't know, right? I was hoping COVID would have ended by now. So, okay, I think on that question is the appetite for technology have increased exponentially. And that's across institutional and also kind of high net worth / family offices. And I think the appetite for Malaysian startups, where I see I've seen results, is actually in the crowdfunding space. So I think people are just trying to find juice. And at the public markets and kind of the larger late scale game, there are interest, like CTOS went very well, Carson's doing very well. So there is, the level of interest has increased, but it's off a low base. To me, if you look at funding trends in the region, we've always been kind of number 4, number 5. So it's up to us to kind of take the next step. Appetite as a whole is increasing and relative is increasing. But as if you're relative to our, if you're putting it relative to our peers or competitors in the region, it's still far cry. So that's how I put a context on the conversation.
Okay. There's a question to directly to RHL Ventures as well. So I'll start off with exactly what he said. So SoftBank's way of funding, big whale prop up, a few corner to the market. Do you think this is sustainable going forward? And how does RHL Ventures differentiate from other VCs? What makes RHL a unique VC partner?
Okay. I think on the SoftBank, there's only can be one SoftBank in the market. Big whale approach has done actually very well for them. So anyone they come in, there's a halo effect for them, and it's like it works for them. Like he's good at selling that story, but also at the same time you operate in a zero rate environment, so or negative rate environment. So fundraising is a bit easier. For us, I think we are working closely under Penjana, and I think we have the backing of MOF in that. At the same time, also working with KB Financial Group. They are the second largest bank in Korea. And also at the same time, they also are a shareholder of the largest bank in Korea, which is Kakao Bank, that just got listed last week. So these are large investors with deep pockets who want to come into the space in Southeast Asia. So whether it's you want government support, you want private sector support, we have the tools. It just depends on how the startup wants to take advantage of that. I think in most startups, I think it depends on what you want out of us. And I think we can provide accordingly.
Okay. And you mentioned that you invest in across all sectors, right? So what is your appetite for the government tech startup, for GovTech? What's the appetite like?
Okay, I think on that point on GovTech, I still don't see startups kind of bridging that gap quite well, but I also think this is because our anything related to government is very archaic and difficult to penetrate. So I think it's a bit of chicken and egg there. The same thing I saw like a few like legal tech startups that came up. No one has been able to crack it because it's been such an opaque and difficult environment. So I think it's as if any low-hanging fruit or difficult opportunity, if you manage to crack it, that definitely is a space, right? So now you see agriculture, which has been kind of in the back burner for so many years, 24 months, boom, like Indonesia, Malaysia, Singapore, all the agriculture guys are doing well. That's all time, right? Like if everyone is doing e-commerce, then there's no opportunities, right? So you just got to find opportunities.
Right. There is a question from a soon-to-be graduate. So he asks do you think joining a VC in Malaysia is a good idea, and would you recommend RHL as a good starting point?
Okay. I think I get about 100 CVs for every role that we put out. So it's a space that I think people love to be in. People love investing, and I think now public equity is a bit less exciting. I think VC, private equity is probably like the top of the VC. I think people really love PE as well, but I think PE is like even harder to get in. So I mean, whether I'll recommend RHL as a good starting point, I think that's kind of a moot point. If I say no, that's a bit stupid, right? So I think a VC is a good place to learn about different businesses. I got into some analysts that some would prefer to be more focused into like certain sectors. So I think if you have a bit more investing and operational experience before coming in a VC, it'll be make it more meaningful. At the same time, also I'm not sure like if Adrian's on the call, he can also say that. I mean, it's a good place to learn the chops and whether how you wanna do your career from there. It's up to you, right?
Right. Okay. So Sirving asks what do you think founders in Malaysia can do better to attract more overseas funding, as well as for founders without VC connections, what's the best way to reach VCs?
Okay, I think the best way to reach VCs is just I think you can cold call and LinkedIn. It works. I've seen companies get picked up through that, especially the seed stage guys, because I think that's part of the job. So I think it's okay. Just reach out, speak to your agencies. Cradle, Magic, MDEC all have the database of VCs. We facilitate the conversation. It helps. We will listen, but whether we invest or not is up to us. And I think in terms of level of interest in companies is just increased. So I think more people will talk to you now compared to before. and the number will just increase. If you look at the database of VCs here, I think 1337 or Lead Ventures keeps one. I think it's growing lah.
Yeah. Okay. What do you think founders in Malaysia can do better to attract more overseas funding? Is there something particularly different that they should look at or do?
Yeah. Okay. So what Malaysian specifically, the way I see it is Malaysian founders are usually not super aggressive and the hunger is not there. So I had a conversation with Sequoia. I asked why they have hardly done deals in Malaysia. Okay, one is I think they also haven't done super well in the Malaysian deal that they've done. So I think that leaves a kind of bitter taste. But at the same time, I think the main reason why they found it difficult is I think they say that Malaysian founders, they don't find that they are super hungry. So I don't know how to kind of articulate that to our founders, but I think you just got to be sure that, hey, it doesn't matter if your English sucks or your presentation isn't perfect. But I think the hunger that you have to show to kind of scale up regionally and blitz scale your business has to be there. Because Sequoia won't be happy with just kind of like 2x growth in 1 year, right? They want 5, 6x growth, right? So how do we get that? So I think that's where our investors, our people fall short. But at the same time, I would say that I think talking to a lot of founders who invested in, some founders we've missed, I think that there is hunger there. And our guys are good in speaking. Our guys are generally good in technical capabilities. And I think you're going to just package it all together.
Right. Okay. And I've got a question from Azwar, who's asking, I'm seeing some funding interest from firms in Eastern European countries. So are these generally trustworthy? Is there a way to evaluate if they're trustworthy or not? If you should.
Okay, money is money. Whoever wants to give you money, I think you should speak to. But I don't know. I mean, there's always a stigma, but I think if there's capital coming there and they've done deals in the region, I wouldn't say no. If I'm looking from my fund's point of view, some investor comes in and he's from Eastern Europe, has money, he wants to invest in my fund, I won't say no, right? I would love for more investors to come in, and I think there should be any approach to any investor, and money beats all.
Okay. So any sort of due diligence that you should do before something?
I think, I mean, for us, like our investors in the past are kind of AML, KYC checks by our fund accountant and all that, and legal. So I think there's naturally a KYC. I think that for investor, for company, I think the easiest to KYC investors to talk to their portfolio companies lah. And if they're legit there, they're probably legit. But there are a lot of dodgy funds out there. I know someone said that we're scared you're laundering money for some Russian oligarch. I mean, I think if a Russian oligarch wants to launder like a couple $1 million through you, I think they probably have bigger fish to fry, lah, right? So unless they're giving you like $100 million, I don't think you should be too worried about it, lah.
Okay. So my another question is, what are the key characteristics you're looking for in startup that you will invest in?
I view it from a very personal point of view, right? So, I mean, one is, yes, I do invest RHL, but at the same time also, like, I do view things from a personal point of view. Who would I invest in? I would like to kind of get exposure to strong partners from a capital point of view. So strong partners, invest together with the right people, at the same time invest in the right people, right? So we are seeing a lot more founders who have experience in the likes of Grab, Shopee. It's recycling. It has a positive externality to the ecosystem. So we have a bit more experience and some numbers to back it up. I think that's where we like to see startups. At the same time, there's a few teams that we like. We love agriculture, alternative protein. We love healthcare and bridging that gap. We also love kind of property and prop tech and finding a way to digitize that, given that a lot of investors from that base. So I think if you tick some of the boxes in those sectors, it's something that we will look in quicker. At the same time, we're quite open to various opportunities.
Cool. Sure, I hope that answered your question. And one more is pro tips for investee company to manage a good relationship with VC partner. What are some of your tips? And what do founders usually take for granted from your perspective? To deal with that?
I think a VC relationship can be as intimate as you want it to be. I prefer if kind of we have quarterly updates with investors, keeps everyone on the same page. At the same time, you can reach out when you need help. But at the same time, some companies just like to kind of give like updates on 1 to 6 months. I think if you're doing well, no one really cares. If you suck, then people will start caring more. I've had companies that kind of update once a month, have a weekly call, monthly call. I have companies who don't update for a year.
Okay. All right. What's RHL's appetite on ESG investment?
On ESG and impact, the trend is there. We also kind of had conversations with LPs in terms of how do you measure impact, how do we kind of create employment from our investment opportunities. I think if you can play the ESG angle well, there's capital to follow. Institutional guys are looking into that. So if there's a way to craft your story in a ESG friendly, I would 100% do it. I think that opens more tick boxes for an investor to come in. Because not only because the GP wants to do it or the investor wants to do it, their LPs like the tick box too.
Okay. And so from the Dana Penjana National perspective, right, since we touched on it a little earlier, I just want to understand, like, we know that RHL is one of the partners of this program. So can you tell us probably a little more about the program and how are you guys playing a role as a partner?
Okay, so other than Dana Penjana, I think it's a great program to start with. I think that it has provided a good impetus to our venture ecosystem. And I think it's brought more players to the venture ecosystem in Malaysia. There was a total of 8 players that were going capital. I think that multiplies the number of active VCs here in Malaysia. There's overseas guys like ACV who've come in, Big Capital, which is backed by Affin. So I think there's good amounts of people coming in, and it depends on how the local startup ecosystem wants to benefit from it. At the same time, marrying kind of local expertise with foreign expertise, and then so the government has the potential to have a multiplier effect on the local ecosystem. So I hope that it provides a good base for more funds to come in. I would love for more competitors or peers to come into the market because we need a critical mass to do it.
Okay, cool. And I think that brings us to the end of a lot of questions that we have. Anybody else has any more questions for Hamzah? Oh, there's a question to us. Yes, we would consider doing a session on seed funding. We will get the team to look at that.
Okay.
And so I would just want to know, do you have any advices that you'd like to share with the audiences here, especially something that will be really useful for them to raise during the pandemic?
Yeah, I think just advice, and everyone's been stuck at home. I assume the audience mostly Malaysian startups. It's a stressful time. You're stuck at home, stressed about the business, can't sleep well. I've just had 2 investor calls, and this morning itself. I mean, it's tough even for everyone involved. I think it's always up to you to hustle and kind of power through. But I think stay strong. I think everyone just keep through, keep faith in your business, have faith in God as well, and then hopefully you'll succeed. Oh, there's a couple more questions.
Oh, there's 2 more questions. Okay, we'll just take the 2 last questions, and then if anything else, we will direct them to you later. So we're building an e-commerce startup with first-time founders. Often feels like we're not attractive to VCs compared to those built around big data, AI, with more experienced founders. So how would you recommend us appeal more to VCs, local or otherwise?
Yeah. So I think as well, I think on the question, yes, if you don't have the experience, get advisors experience, right? So I've seen VCs, companies in Indonesia do this very well. Like they have like former finance minister as an advisor, this and that as an advisor. I mean, now old people like to advise startups because it's sexy and they're bored.
They're bored.
Some of them, anyone in your network, even though you have experience, I'm sure you have someone out there who has experience. Sell the story. Get them as an advisor. Do it for free or give them equity options. Then get it from there. And on the last question about financial modeling, I personally find it important when we're doing like kind of later stage, Series B and onwards. I think it's very important to have good financial models. Even for Series A, when you have a good model, it speaks volumes of you as a company. So I would say more often than not, have a good model so you can take it, and investors will appreciate it, even though it may seem pedantic to do.
So how detailed? As detailed as possible.
Yep.
Okay, cool. All right. Thank you so much, Hamzah. And I think it's been a really great informative session. You answered all of them.
Feel free
to have any
contact info@rhl.ventures if you got any questions or you want to present your deck. Our team can follow up with that. We'd love
Sure.
to see more good Malaysian entrepreneurs in the platform, and I kind of use Penjana Capital to back them too. So thank you so much, everyone. Have a good day ahead.
Thank you so much. Thank you so much, Hamzah. So guys, what I'll do is we will be sending up a wrap-up email at the end of this, and with that email will come some contact info and some places that you guys can then reach out, and like Hamzah said, we can get things going. So if you have any further questions, then you can reply us through that, and we will get back to you with detailed answers as soon as possible.
Thank you.
So thank you so much, everyone. Thank you, Hamzah. Stay safe.
Thank you. Bye-bye.
And keep going, guys. Right. Bye. We'll see you in another session of Business Buzz. Bye.